What's good, everybody? It's Sunday, February 2nd, 2025. About to finish up my top dot analysis on MES and MNQ. A few hours till Sunday open. Let's see what opportunities or threats present themselves to me. Let's get right into it. I'm going to start from the monthly. Right off rip, I'm screenshotting this. To me, this is a bullish correction, possible continuation. Drawn liquidity is the all-time high, as well as previous month low. It's a new month, so we are going to mark up all of these accordingly. Let's jump into my journal. Find the MES. Let's screenshot. Let's paste the screenshot. So I see a bullish correction, continuation. Price has mitigated from monthly OB, order block. Price may become range bound. So, right, we have this mitigation of this monthly order block with a nice wick test from it, pushing higher, but we are inside the previous 2-month range. So what I want to do is I want to jump back to the charts, go down to the weekly, see what I can recognize. Rough rip, we got that previous week. We got these equal highs above. Weekly high. Always want to mark off the weekly high and the weekly low. Okay, I don't really want that. But anyway, so high, lower high, higher high. We have a low, so we're kind of ranging. We are stuck in this range. Right here, we are stuck inside of a weekly range. Bullish, it's a bullish range, like a bullish consolidation, but definitely a range. So I'm gonna jump back down to the journal, paste that screenshot. This looks like a bullish continuation. Range has mitigated from weekly logical area, order block, whatever you want to call it. Draw on liquidity equals equal highs plus previous month high plus all-time high counter trend side, we are mitigating from weekly counter trend, logical area, order block, whatever you want to call it. So right here we have the mitigation of the weekly with this wick test. Price seems to be printing higher. We also have this mitigation from this weekly counter trend, but to me that's kind of invalid with the equal highs that were created after our first kiss of it. We have the previous week high, absorbed previous week low. Absorbing previous week low. Let's jump back down to low time frame. Want to jump back down to the daily. Where that redelivery. Yup. So we have, looks to be, it might be shifting bearish. Have that redelivery of the volume imbalance. Hey, remember we're in a range. We're at the extreme of the range. I expect price to go lower first. So we're in a bullish expansion, extended, actually a bullish pullback, consolidation. I take that. Get rid of that alert real quick. Boom. I expect price to come from this previous day low first. All this in my eyes looks like sell side. I believe we have, yeah. Break retest liquidity pool. Whoa, 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 whoa. I don't know what it is about this annotation for this specific one, but anytime I press it, it just disappears. It's annoying. Alright, I don't know anymore. Like, draw. Yeah, should work. There we go. It's crazy. Where's my water? this screenshot in. We are looking at a bullish pullback, consolidation. Price is extended and has begun to pull back. Redelivery previous month plus volume imbalance, gap, whatever you want to call it. Draw on liquidity equals previous day low plus break retest. Break retest pull. I don't really see anything bullish at the moment besides the equal highs above. So we have this bullish expansion. Pullback seems to be created. We are ranging, consolidation, accumulating, redelivery of the previous month plus the volume imbalance. Looks to be trading lower. Drawn liquidity is the previous day lows plus this break retest liquidity pool. So that's all I need from this time frame, and now I'm gonna go lower. We're gonna get even lower. So you clearly see we are in this range. We hit the extreme of the range and we had that nice reaction from it. I don't really need this anymore on this time frame. A monthly's cool. I don't mind seeing that. This kind of ain't doing nothing for me. We are at the volume imbalance. But even that, I don't really, not too crazy about it anymore. That can stay over there. You know what? Yeah, we'll just check that. Why not? Alright, previous week. I don't want to see that right now. Too much clutter. Way too much clutter. I don't really need to see the previous month. Does not need to be there. I just care about the equals. Yeah, this right here looks like just straight up sell side. Looks like a trend line liquidity pool. Yeah, I got the magnet on. When I got this magnet on, it'd be acting all types of crazy. I bet. We got that redelivery. Got that redelivery of the 12-hour inversion fair value gap. Huge engulfing flame pattern created. We look to be trading lower. Let's get over to the journal. Let's lock that in. What do we see here? I'm looking at a bearish reversal. Price has rejected the extreme of the weekly range, consolidated range, redelivery of daily volume imbalance plus 12-hour inversion, draw on liquidity equals trend line liquidity pool. Let's put trend line liquidity pool plus break retest liquidity pool previous day low. As far as what is bullish, I don't really see any bullish nature. So, I say bearish reversal after testing the extreme of the weekly range, redelivery of the 12-hour inversion, daily volume imbalance, the previous month, drawn liquidity is the liquidity pool, sell side, previous day low, plus the break retest liquidity pool, trending lower. We could even come for the previous week, but I'm not there yet. So, what I want to do now is get even lower. Let's get to the 6 hour. Let's get on over to the 6 hour. Beautiful. That 12 hour turns into a 6 hour, and we have that same sort of redelivery from this time frame. Whoa. Oh, I hit a button I shouldn't have hit. Plus the logical error. That logical error is just a 6 hour order block engulfing pattern. Created another engulfing pattern. This one candle took out 1, 2, 3, 4, 5, 6, 7, 8, 9, previous 10, 11, 12, 13, 14. It just took out a bunch. So let's identify what we're seeing. Over to the 6 hour. It's looking like the same as above. Looks like a bearish reversal. Price has rejected from 6 hour logical error plus inversion for value gap. Equal lows left along equal lows left alongside the previous day low, and draw on liquidity is the same as above. Equals same as 12-hour. On the counter trend side, the only thing bullish that I see is that we're redelivering a 6-hour inversion fair value gap, but I'm not even sure if that's below equilibrium. I have to check that. It is. We are delivering equilibrium as well. So 6-hour inversion fair value gap. Beautiful. So once again, what do I mean by that? I see a bearish reversal. We've rejected and mitigated from this 6-hour logical area, redelivered the 6-hour inversion fair value gap, fell off a cliff, printed another engulfing flame pattern, relative equal lows printed right near the previous day low, acting as a obvious draw on liquidity. Same draws on liquidity as a higher time frame is that trend line liquidity pool as well as the break retest liquidity pool. And only thing bullish that I noticed from this time frame at the moment is the redelivery of this inversion fair value gap. I mean, this thing right now on an intraday perspective is starting to look bearish. Higher time frame on like a monthly, weekly perspective, I'd say we're still bullish, but we might see some lower prices to start the month off of February. Is what I'm starting to see, but ACH, anything can happen. Let's go lower. Alright, bet. So I don't really want this on this time frame. 1, 2, 3. I'm curious about this. It was a perfect 3-hour double tap. Beautiful. I don't know what this is for. This would be this is triple mitigation. I don't ever I say no to triple mitigation. This whole thing to me becomes liquidity. So you have a 3-hour mitigation, right? So you tapped it once, we pressed higher. We tapped it twice, we pressed higher. This is the third tap of this candle right here. Based on my analysis over the years, it's very unlikely that it will hold the way that we would want it to. I don't really care about the drawn liquidity anymore. I know where that's at. Let's get rid of that. This right here is kind of like boom, boom. You know all about that. That's what's up. Just don't really matter. Previous day. Yeah. Let's jump down. 3 hour, same thing, same analysis as the last. It's good. It means it's confluence. Three-hour, double tap. The 6 hour plus 3 hour FEG. Triple mitigation. A 3 hour logical area, which is just an order block. Draw on liquidity equals same as 12. And there's nothing bullish here. I don't see any signs of bullishness until we get under here. I'll show you. Let me go back to the charts. Let's get back to the charts right now. So I don't see any bullishness until we can absorb some of this sell side liquidity. Now, if we can absorb some of this sell side liquidity and print a manipulation pattern to get price higher again, then I would look to go long. But for where we are right now, I'm not seeing any long opportunities. Maybe as we go lower from a very intraday scalping perspective, maybe we can go a little higher just to redeliver some inefficiencies in this huge down candle to push price lower. But as of right now, it's looking pretty bearish. We are still above the EMA, the 200 EMA, but I'm not too crazy about going long this week as of now. That can change. Let's get lower. Let's get lower. So that's dope, right? This is all reasons why I wanted to sell. Look at that. Look at that. Look at that. Look at that. Sell side was took. Let's write that off. 90-minute turned into an inversion. That's pretty cool. It's not something I would trade, but I definitely want to acknowledge that for sure. This is a draw on liquidity. It's a liquidity target if price ever does want to make its way back up. That's fact. So it's pretty much just the same. Just the same. So what I was saying from the 3 hour high, I can see price maybe come a little lower, absorb some liquidity and push higher. That would be similar to what we've seen here. We had a smaller version of this, but you see the liquidity pool that formed, price absorbed some of the sell side and was able to accumulate enough orders to be able to push price higher, which it did. Right now, this thing is looking pretty bearish. Looking pretty bearish. We are getting a redelivery though. So this is where that intraday short-term scalp perspective can come into play, where we could get a push higher just to go lower. So let's jump on down to my journal. Let's jump on down to the journal. 90-minute, same thing, bearish expansion. It's probably expansion. Same analysis, pretty much same analysis as the 3-hour. Except we're redelivering 90-minute IFG plus 90-minute FG left, way above. This acts as a draw on liquidity. So I'm looking at a bearish reversal. This is a bearish expansion. Same analysis, rejected, mitigated from the 3-hour, double tap of the 90-minute fair value gap, expanded lower. On the flip side, for bullish, I have that redelivery of this 90-minute inversion fair value gap here with this wick test from it, and then drawn liquidity as well as this 90-minute that was left unfilled way up above. I believe that could be in a volume balance as well. I gotta see real quick. Close 83.75. So yeah, that actually is a volume imbalance right here. So I'm actually gonna add an additional screenshot and just kind of write that off real quick. Just 222. So it's a volume imbalance right here. Price may want to redeliver lower from here or redeliver lower from here. This is why in the lower time frame, maybe Sunday into Monday, we can see some push up, but only for it to go lower again, or it may just fall off a cliff. We got to go lower though. Let's get lower. Let's get lower. All right, some confluence here on the hourly. Have 1 hour left, and if you actually drag that over here, it's actually an inversion. Value gap in line. I love seeing that. That's what I love to see. So that's here. So yeah, we may see something like this or like this. Possibility. Sweet. Ooh. All right, let's get over to the journal. It's interesting. So we're looking at a bearish expansion extended. One hour FEG above may act as area of interest for a price to re-deliver lower from. Draw on liquidity is still the same as 12 hour. Alright, we go to the 12 hour. Draw on liquidity is the previous day low. The trend line liquidity pool and the break retest liquidity pool. Right? So what do I mean by that? Draw on liquidity is still previous day low. This trend line liquidity pool as well as this break retest liquidity pool that you can't see in this higher time frame, but I wouldn't mind seeing price want to redeliver this 1 hour fair value gap, inverse fair value gap, or maybe even higher up here. So that's what I'm looking for. I'm actually going to go one time frame lower just to see if I can see a little bit more out of this. So there ain't nothing here. So this becomes okay, but this becomes invalid. There's nothing here. There's no double tap on this time frame. So this might be invalid. Price may actually just want to drop off a cliff now. As you can see, we are redelivering price. Have a redelivery of this 23-minute fair value gap. Nice engulfing pattern left. But there is a break retest liquidity pool. Left, support, resistance. So there's definitely something to be said that maybe this isn't as strong as we would want it to be. So you might have some liquidity above in this. But you definitely can see that we have liquidity below all day long. Relative equal lows. That is sell side for a fact. I don't really need to see this. I know that we're triple mitigating. I do want to notice about this though. Is that worth it on this time frame? Yeah, that's okay. Previous day is the draw on liquidity. Let's see. It's tough. It's tough, man. We're just ranging. Look how sideways this price action is. A lot of accumulation built up. I actually have to document two of these now. So you have buy side and sell side presenting itself. Beautiful. But then you have nice fair value gap presenting itself inside that one that I thought was invalid. So this could be able to see something like this. Right, you have this redelivery of this. Redelivery. So maybe we can see something like this. Just doing the 18-minute so we can just see what we're looking at. Kind of just crunching up. I'd say we're at a bearish expansion, accumulation. Price has tightened up. Tightened its range. Price has tightened its range. Redelivery. Fair value gap lower, leaving a bearish engulfing. Break, retest. Liquidity pool above. That's about it. Liquidity equal lows plus previous day low. So bearish expansion, accumulation. Price has tightened its range. It redelivered this fair value gap, leaving behind this bearish engulfing flame pattern. Drawn liquidity are these equal lows, relative equal lows in the previous day low. On the flip side, we have this break retest liquidity pool above in the redelivery of the 90-minute IFG. Let's put that actually. Redelivery 90-minute IFG inversion. Okay, let's go to the 6-minute now. It's really just a bearish accumulation. Is stuck in a tight accumulation phase, building opinions in the marketplace. That's definitely how you spell opinions. There we go. Buy side plus sell side available. 6-minute FEG as area of interest for a possible redelivery of price lower. 6-minute FEG. Oh my jeez. Beautiful. So what am I looking at? What am I saying? I'm saying that we're stuck in this tight accumulation phase. Opinions are building in the marketplace. People going long, people going short. Sell side is available as well as buy side, and we have this inefficiency, this gap in price, this 6-minute fair value gap. The price may or may not want to redeliver price from. It's also nested inside the 1-hour inversion fair value gap. Drawn liquidities are all the same as we said previously. Now let's finish areas of opportunity to explore. First of all, sit on my hands. If buy side is absorbed first, then I want to hunt for shorts from inside the 1-hour FEG plus 6-minute fair value gap. I don't know if I want to hunt. I think I would just take an entry off of that. Alright, if sell side is absorbed first, then I will sit on my hands and wait for manipulation pattern to form to the upside. Wait for more. I'm not going to wait and wait for more price action for analysis. What am I sure? I am unsure if price will come for the previous day low immediately at Sunday open. Absorb buy side and redeliver from 6-minute FEG or higher. How could this fail? If I stick to my trading plan, I will not fail. What are the drawbacks? There are no drawbacks to sitting on my hands and practicing perfect patience. What related ideas exist for this hypothesis? I don't know. I'm not going to fill that part out. Anyways, so that is a full top-down analysis done on the micro E-mini S&P 500 index. Let me jump back over to the charts. I started from the monthly, brought it all the way down to the 6-minute. I have a great idea of what to expect leading into Sunday, leading into the first week of February. That's actually pretty cool. I believe that's the 6-minute right there. So that's what I'm looking at. Maybe we see something like that. Here's the potential price. We'll either do this or do this. That's what I believe. Anyways, I'm getting sidetracked. I'm tired. I haven't even ate today. Oh! But yeah, that's my full top-down analysis right now. I'm just going to wait and see what happens. Set my alerts. Set my alerts if sell side is taken, and set my alerts if buy side is taken. Don't really care about seeing that. That's kind of what I'm looking for. That's it. That's it. Now we sit and wait. What will happen? Is price just going to fall off a cliff and just come for the previous day low and even further for all of these lows? Are we going to have some type of correction or retracement of this big impulsive bearish move that happened on Friday to push price lower into the previous day low? But I believe this previous day low is going to be took. If not on Sunday, then on Monday or sometime this coming week. It's just how are we going to get there? That is my clear and obvious draw on liquidity. I'm not going to trade inside of this range, so I'm going to wait for either buy side to be took and try to get short over here, or if sell side is took, I'm going to wait for some type of pattern to form on the lower time frames where I can look to take price either higher or lower. But that's it. I said I was going to do MES and MNQ. I'm a little bit tired, so I'll probably hop on later before the open, maybe before Asia. Actually, I don't trade the open, I trade Asia session in New York, so I'll probably hop on around 7 Eastern time, finish up the top down on NASDAQ, and see what opportunities present themselves to me. Let me just run through these charts. I have my top down already done on gold, my top down done on the dollar. Everything's ready to go. I feel good. I feel confident. Now it's time to just relax. Enjoy the few hours I have left until I have to get to work tonight. Alright, hope you all enjoyed this. If you found any value in this, hit that like button, hit that subscribe button, leave a comment, talk your shit, I don't care. But I'm out of here, everyone. Peace.